This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Chapter 2 deals with information technology. And the first thing we have to get clear in our own mind what is meant by the phrase or the term information. Information is usually defined as data with meaning. But that kind of raises the question, what's the difference between data and information? Well, data, you can think of the raw facts. So, an example of data would be a great big pile of invoices which you would issue to customers over the year. It could all be perfectly accurate, perfectly comprehensive in the facts and figures which it holds, but they're just in a stack of paper. It wouldn't be very informative to anyone, wouldn't be very useful to anyone. It would be more informative, more useful to become information if you began to sort that stack of invoices into invoices to each customer. And then it might be even more informative if you've invoices to a customer, you sort it out, say, well, these ones are paid and these ones are still to be paid. These represent what is still owed by the customer. And you could get even more interesting information out if you said, well, this invoice that's still to be paid is very new, I wouldn't expect it to be paid. This one here is 3 months old, why aren't they paying it? So data of itself can be overwhelming. You need data, but for managers, you need to be able to do something with the data, usually make decisions of some sort, take action. And for that, it needs to be processed, summarized, presented in a way which is informative. In other words, it's data with meaning. It is information. What are the qualities of good information? And quite often this word accurate is used as an acronym to try and remind ourselves what there should be. Different texts may put slightly different words for each of these initials, but this is fine. And the first one we have, let me just get my pen working. First one, the A here means accurate. Now, accurate doesn't mean necessarily absolutely precise. It depends what you're using the information for. So if you were the chief executive officer of a large multinational company, you would not want to know to the last cent, or even to the last dollar, or maybe even to the last several $1,000s what sales were. You might be dealing in millions. So accurate means accurate enough for its purposes. And we have to be always mindful that generally the more accurate you want the information, the more it's going to cost you to record it and process it, the more bother it takes to get it more accurate. The second one is complete. So the information should be complete. We want to know all the amounts we owe to customers, all the amounts we owe to suppliers. We want to know all our liabilities. We want a complete list of, for example, our major customers. If we're going to be maybe inviting them to a social function, we want a complete list of perhaps non-current assets, machinery that needs to be maintained in a year and so on. Incomplete information is likely to be very, very misleading information. Second, cost beneficial, or third rather, cost beneficial. The cost of collecting the information should not exceed the benefit from collecting it. Many organizations go to great lengths to collect lots of information, and this costs money, it takes time, and then they never do anything with it. They can't make any decisions about sales or what products to make, and the information then just becomes a cost rather than a means to operating better. User targeted. The information should be presented in a way which is useful to the user. So if you were a senior manager, if you were at the kind of tactical level, perhaps there, then you might want to see summaries of sales to major customers, because you would have to see where your major customers were perhaps not buying as much as you hoped, and you need to go and try to rectify that. If, however, you were further down the organization, you were doing the recording of how much was sold and how much was received from these people, then the information would need to be perhaps more detailed. So the same information is not appropriate to every user. They have different kind of requirements of presentation, of accuracy, of actually what the information is that will help them to do their job. It has to be relevant. A kind of extension almost of user targeted, but perhaps attacking the idea or the phenomenon of information overload. IT systems, bless them, are very good at producing lots and lots of information, and email systems are very good at distributing that to everybody in the organization. And if you're not careful, people keep getting emails which have no possible relevance to them, but of course they don't find that out until they've read them and then decide to delete them. So you can do harm by sending irrelevant information to people. It takes some time to sort through it, it may confuse them and so on, and distracts them from their job. Authoritative. Authoritative means that information should be or can be relied upon. Perhaps what we need to be a little bit wary about in authoritative here is information coming from the internet. You know, when you Google terms, there is a tremendous variation in how authoritative the answers are to your queries. Some answers you get to your queries are complete rubbish, and are obviously rubbish. I think the difficulty comes when an answer looks as though it could be believable, but how do you judge whether it's come from a respectable source or not? And, you know, an organization like Wikipedia has maybe got itself into some difficulties from time to time when the subject of their entries, let's say a company, people from that company go in and edit their entry in Wikipedia, maybe to remove the bad news and to accentuate the positive, and so on. So wherever you get the information from, particularly maybe external information, you need to make sure it's believable, that it is kind of respectable, if you like. Timely. Timely means that information should be received in time for you to make a decision with it. So if a customer rings up and says, have you got 10 of these units, you would want to be able to tell that customer yes or no within a few seconds, because the customer isn't going to want to hold on. If you are controlling a machine, if you're controlling aircraft with information, and many modern aircraft fly by wire, then the information maybe has to be processed in fractions of a second to be able to act on it quickly. Other times, if you're asking about information maybe about somebody's salary, well, salary is only paid once a month, you might be able to wait several weeks before you get information about certain things. We all want it faster, usually, but you have to remember that quite often the more quickly you get information, again, the more expensive it's going to be. The information should be received quickly enough to be able to contribute to the decision you're trying to make. Too late, obviously, it's wasted. And finally, easy to use. If information is presented on a printout or on a screen, you want it to be described, you want it to be annotated. You want, sometimes, if you hover the mouse pointer over something, up will come a little tooltip, as they're called. It'll say exactly what that information is and so on there. Information which is presented in and there's going to again be too much information, be presented in a very confused way, very cluttered. It may be better to present some information which is presented graphically rather than numerically and so on. So it's easy for people to use, and they can really see to the heart of what it's trying to say without too much difficulty. Recent developments in IT have made a huge impact in the way people work. So we have, for example, new communication channels. If you think about reaching your customer, nearly all companies, even very small ones, now have websites. Sometimes it will only tell you kind of name and address and what the company does, a very static web type site. Sometimes they will be sending emails to people, targeted emails, keeping up to date, and so on. Facebook and Twitter, again, very important social media for keeping in contact with your customers and so on. Within organizations, it is possible to bring together information from many branches, maybe in different countries, very quickly and so on. So fantastically increased speed of communications. Office automation. Again, we have to think of maybe office automation. You can even think of something very modest like word processing. You can think of spreadsheets like Excel, allowing you to try different budgets and different what-if statements very quickly and so on. You can easily send emails to maybe 30 different recipients very quickly. You can scan documents. Sometimes when documents are scanned, they can be scanned into a word processor, optical character recognition, and so on. In supermarkets, okay, it's not quite an office, but in supermarkets, of course, at the checkout, your goods are scanned. It is automating the process, basically, of inventory management. And the final one we have in here is the phenomenon, which works more in some organizations than others, of home working, where we allow employees to work at least some of the time from home. It cuts down on their time to travel. It can make work attractive to people who might otherwise not want to go to work because of a daily commitment to commute into the office can be perhaps very difficult. It can reduce the amount of office space you actually need to provide for people. And home working with modern communications, which can be made secure, can be very attractive. Not that many people advocate home working 100% of the time. One of the downsides of home working is that you can feel, in a way, semi-detached from the organization, that you're maybe not as loyal to it. You don't hear the gossip as much, and gossip can be an important method of communication. So usually home working is maybe you work from home 2 days a week and come in and actually meet people on 3 days a week. The types of processing systems that we have. First of all, transaction processing systems. Transaction processing systems do what they say. They process transactions. So you make a sale, it has to be recorded. You make a purchase, it has to be recorded. If somebody works 5 hours on that project and 4 hours on that project, it has to be recorded for costing information. So transaction processing systems are really the basis of modern accounting systems. This is the initial recording of the transaction, getting it into the accounting system. Once information is in the accounting system, what you're really recording here is not information, you're recording data here. But once the data is in there, then it can be easily manipulated and it can become information. So once you have begun to record sales transactions in the system, it's then really easy to analyze that, say, by customer, or to analyze it by product which is being sold. And you can analyze maybe the profitability by customer. Once you are maintaining your receivables ledger, what people owe you, then you can work out who hasn't paid quickly enough. Who owes something from 6 months ago really needs quite an angry phone call perhaps to encourage them to pay. So management information systems is the provision of information to managers that allow them to do their jobs. Decision support systems, think about the name, it's supporting decisions. It's not making the decisions. Sometimes management information systems can actually make the decision. If you have a credit limit of, let's say, $10,000 in somebody's account, and they're sitting there owing you $9,000, and an order comes in for another $5,000, that would bring them up to $14,000, above their credit limit, then the IT system, information technology system, can actually refuse that order. I mean, it's a typical what happens in credit cards if you try to go above the credit limit. So these management information systems tend to be making rather kind of black and white, yes-no sort of decisions. Decision support systems are making what are called non-structured decisions or unstructured decisions. In other words, there's no guaranteed way of getting the right answer. So a decision support system, think about the decision, you have a new product, what price should you sell it at? And you can look at maybe what competing products are selling at, but maybe they're not direct competitors, maybe you're slightly different. Maybe your brand is of slightly different connotations and feelings. You have to look at what profit you have to make as well. And whether you decide to charge maybe $12, $15 or $18 for that, it is not really a process of definitive science. And what a decision support system might allow you to do is to say, well, if I charge $12, this is the profit I might get. If I charge $15, this is the profit I might get, and so on. So managers can be helped to get toward a decision. Similarly, if you're doing next year's budget, there is no right way of doing next year's budget, really. What will the sales be? What percentage will they increase by? What might happen to costs? What might happen to sales volume? And we don't know what competitors are going to be doing. We don't know what the economy is going to be doing. But if you put the budget on a spreadsheet, like Excel, then you can try experiments, what-if experiments. What if we increased the sales price by 3% and the volume stayed the same? What happens if we increase the sales price by 5%, but the sales volumes fell by 2%, and so on? And people can kind of feel their way, almost experiment their way towards what might be the best decision. And then finally, we have the executive information system. This produces information for executives, people at the top layer, the strategic layer of the company. And the particular elements which you tend to talk about when looking at executive information system is they require quite a bit of external information. External really plus internal. The executives at the top, for example, will be deciding, should I open in South America? And they will need lots of information about competitors in South America, what the economies are forecast to do in South America, maybe about the rules and regulations of getting into the market in South America, and so on. But they're making these long-term strategic decisions. They'll be thinking, should we build a new factory? And if you're thinking of building a new factory, you need a lot of external information about what it might cost, maybe where we should build it, what grants might be available in different countries, what the demand will be from customers to see whether it will actually support a new factory, and so on. The other phrase you often see here is one which is called drill down. Quite often what the executive at the top of business will see is very summarized information for the whole group. So let's say we have the receivables, the amount owed to the whole group, but the group has maybe got 5 divisions. Drilling down would mean the executive kind of double click on group receivables, and this would split into the 5 amounts from each division. The executive could double click on one of those, and then would break down into receivables maybe from your main customers and so on. So it's saying that most of the time executives are happy seeing summaries, but it allows them to go down as they wish into more and more detailed information should they need it. And the final element, which is often associated with executive information systems, is graphical. Quite a strong graphical interface and flexibility. Flexibility to find information you want, to maybe search for particular results of the business and so on. And graphical means that if you're looking at maybe sales trends, profit trends, cost trends and so on, you can often see better by looking at a graph how sales are perhaps increasing but seem to be kind of tailing off than maybe you get by looking at figures themselves on a table. The categories of information technology tends to be talking about the hardware, if you like, the machinery which is there. Information systems tends to be a phrase which is more to do with the type of information which is provided. But you can have a standalone machine, simple standalone machine, not connected to anything else at all. You can do your own processing on it, but in an organizational context, you tend to want to share information. And in most businesses, they will very quickly move to what's called a LAN, which is a local area network. So a local area network, in the office you put special cabling around the office, and people can plug into the cables. And they can share information between themselves. They can send emails very easily to each other over the local area network. There's often one of the machines on the local area network is called a file server. Let me get the pen going again. File server. And the file server is a machine which is really dedicated to holding a large amount of information, and everybody kind of shares into that. So on your file server, you would have your lists of receivables, your payables, how much is in inventory, and so on. And it doesn't really matter who you are or where you are. You can go into this central repository of information and find out whatever you want. And everybody sees the same picture. That's the important thing. If you had just lots of standalone laptops or desktops, there is no guarantee that the inventory records in each laptop are equally up to date. A WAN is a wide area network. So a local area network, special wiring. It's usually in a business, perhaps it's around a campus at a university, but it's all very local, low distances. A wide area network allows that to extend, say, between cities. And what you tend to have in a wide area network is you have a little local area network, let's say in one factory, and then what you have is basically using a telephone system, public communication systems, that then will communicate maybe to a local area network in another factory. But to get it over the wide area, you're not going to wire up directly from one city to another yourself. You're going to use public communication systems, the telephone system, basically. The internet, I think we all know about. The internet is this huge network, basically, where you have websites, and websites is just a kind of unique address where information is held. You can buy goods and so on there. You type in the www and then the address and so on, and the system works like magic and knows where to find that web page or that piece of information. And we access the internet through browsers such as Firefox or such as Internet Explorer and so on. An intranet is an internet, or like an internet, uses internet technology, but within one organization. So the internet is international, if you like, and intranet is enclosed within one organization. And basically, you are looking at organizational information, but through a browser. It's a very, very good way of, say, you can put on the intranet, you can put the human resources rules, the employment handbook, if you like. Instead of printing off and distributing to people the latest newsletter, it can be available on the intranet. You can have warnings there, perhaps, of problems with a product and so on. You can have, be announcing maybe something to do with a customer and so on there. Again, everybody sees the same information. If you are altering maybe instructions, if it had been the old paper-based system, there's always people who maybe don't update the instruction booklet or the handbook for the latest information. But the intranet will be equally up to date for everyone. No excuse for not knowing what's there. And an extranet is not, as somebody said, a spare intranet in case the first one breaks down. An extranet is where you have got, or your intranet, if you like, your computer system, has access to perhaps a supplier's computer system. So what you could do is, if you saw your inventory going down and it hits reorder level, your system can basically initiate an order which goes straight to the computer system of the supplier. So an extranet is access to computer information on somebody else's system. So extra meaning basically outside. Levels of information follow really the levels of management, which we've got here. Strategic, tactical and operational here. And it does, the type of information differs here. So we just put down the main characteristics of the top and the bottom here. So if we look at the strategic information, this is often highly summarized. You're dealing with group results very often. Okay, you may have the ability to drill down, of course. It is often forward-looking. Meaning that you're often dealing with what's going to happen in the future. It is a business of the strategic managers to plan for the future. So we need to have, say, market forecasts for the future. We need to have budgets for the next 2, 3, 4 years and so on there. We need to think, how is the market going to be developing? What are competitors going to be doing and so on there. Obviously, they'll be looking at historical information as well. How have we done? But often you're looking forward there. There's obviously then very many estimates in it. By its very nature, if you're forward-looking, you are making estimates. So it's not going to be perhaps as reliable as some other information. We have to be aware that it's an estimate here. And the final thing which is put in here is it's ad hoc. And ad hoc really means it's often non-routine. So we said earlier that the CEO might come in one day and say, I want to find out about Brazil as a potential market. No one has ever looked into the Brazilian market before. There's a once-off special non-routine report required, and it may never be required again. So again, we need great flexibility, access to outside information, and so on. Again, the middle one here should say tactical. Not technical, tactical. We go to the bottom one though, operational. The people, if you like, recording the day-to-day kind of operations in the organization. Well, this is very detailed. If you're recording sales to a customer, you'll record it to the last cent. There's absolutely no way around that. It is nearly always historical. This is where the transaction processing goes on. We are recording that a sale has been made. You're not often looking to the future in this year. It is not estimates, it has actually happened. Okay, so it's going to be very accurate. And finally, it tends to be routine. So every week you do a certain type of report, or you update a certain type of information and so on. Every month there'll be a schedule for doing that sort of processing and so on. All I would say about the people in the middle here is a bit of a mix. These are the people, these tactical managers, they are responsible, if you think, for getting this year's budget. They will be looking at the budget, they'll be saying, right, we're 6 months through the year, we're falling a little bit behind, how can we improve the next 6 months of the year? So there's a little bit of looking forward in there. It'll be summarized to a degree and so on there. So it will. From time to time, they might do a little bit of investigation as to why sales or a particular product haven't gone quite so well. But also they'll be looking very carefully at how sales have gone, how results have gone for the year. They'll be in there in kind of intermediate levels of accuracy and so on. And what we have to ensure is that the information which is being provided to people can be provided at these kind of different levels and different characteristics for the levels, so that it is in a way user targeted to what your job is. The final slide we have on this, really just to cover the syllabus a little bit, it does talk about internal and external sources of information, which is good. Obviously it can be almost endless here, but typical internal sources of information that would be useful here is a sales analysis, analysed by product, analysed by customer, analysed by country, maybe analyse it by month, so you get a seasonality of the sales coming out, which then you could maybe tie back to your production. Inventory reports. For example, how often have we run out of inventory and then maybe lose sales? What inventory isn't moving? It's been there for 6 months, it's still not selling. Maybe what we need to do is to reduce the selling price and shift it out before it gets even older. Debtor aging. Amounts that are 30 days old, been owing to us for 30 days, kind of pretty normal. Amounts 30 to 60 days, getting a little bit long. 60 to 90 days, why haven't they paid us? Over 90 days, really worried why they haven't paid us for 3 months, so on. And what you tend to do with this information is react to it. Once the debts get older and older and older, you begin phoning them up, trying to get them to pay. When they get really old, you might start taking legal action and so on. Attendance records for staff. You can do it in schools. We needn't always be dealing with profit-seeking organisations, but in schools, attendance records of pupils is important and is an internal source of information. External sources, internet, but beware of how authoritative that information is. You don't know who's put it out there, and just because it comes near the top of a Google search doesn't necessarily mean it's authoritative. Marketing literature that people can send you by conventional post or by emails and so on. This is useful to you. It lets you see maybe what your competitors are doing, what prices they're charging, what special offers they have. Conferences and courses, more formal transfer of information here, but in conferences and courses, quite often the most interesting stuff is actually networking, hearing what other problems or what problems other people have had and how they've solved them and so on. Commercial databases you can pay to get access to. You can pay maybe to get access to databases on share prices, although a lot of it's free. You could pay maybe to get access to information about interest rates in different banks. You get Again, much of it's free and so on. But a lot of the freer information isn't perhaps quite as detailed, quite as up to date as the stuff you pay for. And then there's government. Government can provide a huge amount of information. For example, in the UK, the government does a census every 10 years. It finds out how many people living in each house. It discovers how many people are under 5 years old, how many people are over 60 years old. It discovers what the first languages that people are and so on, what their qualifications are and the like. And if you were thinking of maybe establishing a big new supermarket somewhere, it's sort of government information, local or central government, that might be able to tell you that in a certain town there are 500,000 people. And it can give you information maybe which would help you decide where to locate your supermarket to be within easy distance of your target market.